Hello everyone, hope you guys are doing great. In my today's video, I'm going to talk to you about a small finance bank called as Utkarsh. So we'll just go through their recent business update and go through the numbers and see what are the things happening and what are the changes that are being happening in the business. And obviously the main result is still to come out. When it comes out, I will go through that also. So if you look at the overall disbursement, right, it has grown by almost around 30% YOY and quarter on quarter almost by 46%, which is close to around 4,207 crores. So, which clearly shows that the things are improving and the bank is, the loans are increasing. But at the same time, if you look at the segment where the loan is growing, it's quite a stark difference, right? So, as I told you, this bank was mainly concentrated onto microfinance. So, things in microfinance are still not that great and are still improving. And what the bank is trying to do, they are trying to reduce their exposure to microfinance, because if you look at their non-GLG loans, right, it has grown by 51% YOY. But if you look at the GLG loans, it has only grown by 2%. So GLG loan is nothing but it's a joint loan group where they give loans to, the group of women to do businesses and everything at a high interest rate, and and they earn interest at the back of it, but it has more exposure also. And if we look at the overall asset under management, right, the overall total loan book, if I see from YOY, it has grew by almost 1.7% to 19,333 crores. But if we see from quarter on quarter perspective, it has grown by 5.6%. So, which clearly shows that the things are getting better overall. And we need to keep an eye and see that how it is going to, pan out in the coming year and the coming quarters. And one of the big shift, as I spoke earlier about the changes in the microfinance, right? So in the overall loan book, right, the GLG portfolio has come down by 39%, sorry, 37%, and the non-GLG portfolio has grown by 30%. So this clearly shows that the bank is trying to diversify their overall loan book and try to reduce their exposure into the microfinance. And if we look at the overall portfolio also, right? If we look at the overall portfolio, earlier it was GLG heavier, which is around 47%. Now it has come down to around 30%. Secured loan books were around 43%, but now it has grown up to 51%. So what the bank is trying to do, right? Where the overall bank is trying to become more safe, more stable, and they're trying to move away from the risky microfinance side. And if you look at the deposit, right, the overall deposit is around 21,654 crores. And if you look at the growth was completely flat. So there was no growth in the deposit sector, but there was something else happening. If we look at their overall CASA, how to say, current account and savings account low cost deposit, it has grown by 10%. Retail term deposit has grown by 19%, and bulk deposit, right, it has degrew by almost 40%. So why this is important, right? Because on CASA and retail term deposit, right, the interest that the bank pays is quite low, and in bulk deposit the interest rate that they pay is quite high. So the overall, how to say, the margin or overall the spread reduces. So for them, reducing the overall bulk deposit but increasing their CASA and retail term deposit will give them better spread and better margin, and obviously cheap deposit, so they can lend at a good rate and earn better money. And if you look at the asset quality also, right, the collection efficiency has improved to 99.7%, and their how to get their stress loans, right, which were at around 5.1%, has gone down to 1.3%, and we expect that the NPAs are going to be even further lower. In terms of LCR, which is liquidity coverage ratio, they are at around 177%, which is way above the requirement. So in case if anything goes wrong, they still have enough cash to run the business without any issue. So if you look at the overall business, the loan, the disbursements are increasing. Obviously, the overall loan book has not grown because of the stress on the microfinance sector, and they're trying to reduce the overall exposure. But if they are able to, make this shift from the unsecured book to the secured book, and if it goes well, the bank can do really well. So we just have to wait for the numbers to come in, and we will see how it goes. And if you like this video, please do subscribe to my channel and like this video. Thank you and God bless you.